All right, traders, welcome to live trading. Here today, I want to show you a couple things here before we show you the video. Now, uh, you see here this line of support becomes resistance, and I'm just going to walk you through some of last night's price action. We had a consolidation, and market just moved up and down within the range, and this is the Euro US dollar 60-minute chart, as you can see on the top of your screen. The Euro had spiked down to S1 pivot and made an attempt to move below the low but failed to hold, formed a hammer, and then rallied up to this level of resistance. Now let's look at the Swiss franc. And I recorded this last night on live trading. Last night there was a live trading section in the program somewhere, and you see this level of resistance here, which becomes support on this up price swing. It is also a 38% retracement as well as the central pivot. And I traded this balance. I traded long at 85, took profit at 24.05 and 24.25 before price spiked up, failed to hold above this previous resistance, just as the euro failed to hold below its previous support. Price since fell through support all the way down to the 62% retracement and this level of resistance, now support. I want to take you to the British pound now, 60-minute chart on the British pound, and let's look at this. Do you recall how euro made an attempt to move below the previous day's lows but failed? The euro actually slipped through. The Swiss franc moved through only slightly, but here the British pound went through the lows, actually went right to the lows and then was rejected, just as was this was of course a result of US dollar selling. Here there was US dollar buying, and the buyers, or the US dollar buyers or British pound sellers, failed to follow through. It was rejected and it moved back into its range. Now let me just walk through what had happened here. Now at this point here, New York is coming to a close and liquidity is getting thinner, and it is getting later in the session. And what we're looking at here is we're looking at the 10-day moving average coming down into play here as well. We've got the 10-day moving average coming into play as well. We've got this level of resistance, the intraday. This is the intraday resistance at the 79% retracement of this downswing. Okay, 79% retracement of the downswing where it formed this kind of a bearish spinning top. Now price is moving up towards this key level, and look how far it's moving, 8,400 to 8,450 late in the session. Then we see price spike up right to this high here and the 10-day moving average, and forms a real nice hammer. And the idea was to trade this high right here. Okay, that's the idea. That's what we're looking for. That's the objective. Is as we see we're getting late in the session and liquidity is drying up, we want to trade that intraday high and the 79% retracement, all in relation to the other currencies. Now, as a result, we saw price fall, and we saw it fall from a high of 84.56, 8.57 on some price feeds, to a low of 13. Okay, so a nice move there, an opportunity to take some pips. And currently we are live right here at 184.24. And what I'm going to do is, you might say to me, Chris, that's nice after the fact to walk through these scenarios, but how do you actually trade it when you're live in the situation itself? Well, it's interesting you should ask that, because I happen to have the live trading video that I did while this was actually happening. And Please stand by and watch. All right, folks, it's Chris here, and this is a recording probably for both the Pro Traders Club and the video CDs that we're putting out with the advanced course. And what I want to show you here is we have a price is rallying. It's very late in the session now. It is retraced, and we're moving up towards these previous days highs over here. Previous day or early session highs, I should say. And what we're going to do here is we're going to place a parent and contingent order on this. And the first thing I'm going to do is just quickly show you we're pulling our Fibonacci's from this high back to this low. On this software, it is configured differently. The parameters are configured differently, so you actually pull the retracement levels from the high down to the low. And here are our retracement levels: 38, 50, 62. And we have an extension here of 127% up at the this intraday high here of 84.57. And what I'm going to do is I'm going to place a parent and contingent sell order up here at 84.55 with a 20 pip stop and limit. And let's go to our order entry. A parent and contingent order on the British pound, and it is a sell order because we are selling, and it is a limit sell order, and we are looking at 84.55 and with a 75 stop and with a 35 limit for now, and we're going to put in there 10 lots. And one of the reasons why our limit is at 35 is because you see this level of resistance, which could become support. We want to have enough range movement in this range here to take some profit before it gets to this level, because it will likely bounce at this level. I will place my order into the market now, and you will see that these red lines here are our this is our entry limit, this is our profit limit, and up here, this red line up here is our stop for the trade. And what we're going to do is we're going to sit and watch price take our order in, and right up here at 84.55. And in fact, we could move it a little higher by 1 pip, 84.56. We can move it 1 pip higher. You see how I did that? And pretty amazing stuff. So what I'm going to do is I'm just going to move out of this clip now and come back after price has moved a little bit, or maybe taken us in. You see this consolidation here. We're late in the session, and price is showing some real weakness. But if we do get a spike up here, this weakness, there's not enough strength, I don't think, or enough strength in the flows to push price above this high here. And we need to see a spike up to test these highs. Would be real nice. All right, and I'm just going to check out for now. It is currently 10:21 a.m. Pacific Standard Time. Okay, folks, we're just getting taken into our trade, and we are now open. We have an open position, and let's look at our working orders as well here. We want to see our pip, profit and loss, and here we go. I just want to show you that this is our limit entry order. Let's just move these windows down here. We're just going to look at the one chart here today. I'm not going to fuss around a lot because I am busy managing a trade somewhere else. So we're getting a bounce here, currently at 0 pips, even P&L, and we'd like to see price come down here to back here to 35, 184.35. But let's just watch price as it moves, and it's respecting the intraday high here. I can't pull up third-party charts on this computer right now, as they are up on my other computers, and these charts currently have some tick data problems. We're going to separate these windows, and that way we can watch our trade and have immediate disposal of these orders. We see our bounce. We're up 4 pips now. If you're a scalper, you can start to take some profit now. And the longer this level holds, the longer that this high here holds for us, the better. And as time elapses and price holds below this level, it's very favorable for our trade, because probability will slowly shift in our favor. And now we want simply time to elapse. We're late in the session. It's 10:33 a.m. Pacific Standard Time right now, and I would just like to see price drift down here and take out our profit limit. Wouldn't we all? Yeah, and I can't scroll through these charts right now because there was some data problems earlier, and there was an errant tick, which has created some problems on some of the charts. Let's see if I can bring up a new one. Yep, quite possibly. No. We can't on the candlesticks. We can't on the bar, but we can on the line chart. Not very viewer friendly. So we'll just go back to our 5-minute candlestick here, and watch our working orders. Now you see how price is now moving in our favor. What I'm going to do is this, I'm going to scroll this down, and you see our stop level up here. I'm now going to move it 10 pips. Actually, I'm going to move it 5 pips lower now. To 70. Okay, and you'll see the stop move. All I had to do is grab this line and move it. So I just grabbed this line and I moved it. Then this little window comes up, I click it, and it shows me the adjustment that I've made on my stop, and then I just confirm it, and there my stop is now moved lower. So I now have a 15 pip stop and a 20 pip profit level. And we are up 5 pips on the trade. You see how our order was at 55 and the deepest it went was 57. So 57 is the exact same high as over here, a high of 57. Do you see how it bounced right there, 57 and 57? Now we're up 6 pips on this trade. Maybe we can expand this so it's a little easier for you all to see. Actually, No, because we want to bring in all the data so you can see the primary reference points. We're up 7 pips now, and we just want to see a spike down here. The thing is here's what concerns me is you see this profit limit is right on this high, but because we're trading the British pound here and it's a 4 pip spread, we need to see price move 4 pips below this red line in order to fill us on the asking price, because we're buying back a short order, right? We sold it and we need to buy back this short order, and to buy it back the bid price needs to move below our profit target by 4 pips in order to be a buy, become a buy order. And that's what we need on this move down. And again, the more time that elapses, the higher the probability we are going to get paid on this trade. Again, my only concern is, or my main concern is, this level of resistance right here. And let's see where it lines up with Fibonacci's. Let's pull our fibs here. And it is right above the 38% retracement of this last small swing here. It's very much a micro swing, and I don't usually use the Fibonacci's on such small a swing, but we're just going to leave them there out of general interest. Why am I only getting the one order up? There we are. And what I'm going to do is I'm just going to leave it here for now and come back. I'm going to come back a little bit later. Okay, folks, we're back on, and we are about to take profit on this trade. We need one more pip. There it is. There's our 1 pip, and we just took profit on this trade. Thank you very much. That's how you trade. Thank you. You're welcome. And that didn't take long, did it? It is now 10:41 a.m. Pacific Standard Time, and that's it. I just took everything out on that trade at the 20 pips, and you see here price is struggling a little bit at these highs, levels of resistance now becoming support, but I think that we still could see further retracement. But we've let's just have a look at we want to view our filled orders. No. Let's just leave it at that, folks. I just wanted to show you this trade. Didn't take long. Intraday high over here from the open of the London session, and price rallied. It retraced 62%. It extended 127%, and the previous day's high. It took us in. Our entry order was, if you look here, our entry order was 184.56, and it went as high went as high as 57, and it fell 20 pips, at least 20 pips, and took us out. And the reason why I like the British pound in this case is because the British pound will give you that kind of volatility, and that's it. I mean, what else can I say? That's trading, and that's how I trade. That's one of the ways how I trade. And what I want to point out here is that because this is going to go into this tape is going to go into the video series, the advanced video series. And what I want to say is this: is this trade was made based simply on the it uses a combination of Fibonacci's, but the intraday highs, and it's made on market knowledge and an understanding of how the market works. And that's it. It's there's no secret formulas here. There's no fancy indicators, gizmos, algorithms, logarithms, neural networks. It's just trading, folks. It's understanding the market and the flows, and how the major institutions respect certain levels. All right, and I hope that helps y'all. And I look forward to working with you again soon, and see you online again soon. Good luck with your trading and be careful out there.